All right. Good morning, everybody. Crazy week. We had CPI, PPI, retail sales. Today's that day. So a few hours ago, we had PPI come out higher than expected. So the rate of the rate of growth is getting accelerated. Same with CPI. So how fast it's growing is also getting faster on top of the fact that inflation is getting higher. Like the rate that it's getting higher is also increasing. Not good. We have core retail sales miss. And so we wanted core retail sales to beat expectations because you want more people to be buying stuff and the economy to be working. But you want inflation to come out lower because the producer inflation is an early indicator of what we'll be paying in a few months. So we have prices going up and we have sales going down. And then we have this is the core PPI, which I believe excludes food and energy. And then we have the headline PPI. So with food and energy costs way higher than expected, twice as fast as expected, the rate of acceleration for inflation growth on the producer side. Retail sales also missed. So this is core sales. I believe this one excludes automobiles. Yep. So it seems like used car sales are starting to pick back up. Because if you take out automobile sales, we missed dramatically. If you include automobile sales, a little bit of a miss, but still some potential growth here. 0.6, still positive, still growing, but not as fast as we would like. Okay. Weekly unemployment claims came out about as expected. No, not too much of a change there. Tomorrow, we have prelim consumer sentiment, not as important as the retail sales number that we got today. And Empire State Manufacturing Index survey for manufacturers, not too focused on that. So today and Tuesday were the biggest news events. Both of them came out very negative. There is now a genuine case for a bearish March. There is a genuine case. Either we consolidate or we can have a bearish March only because of this information. The number one rug pull of the year, I'm about to share it with you if you guys stick around here for a few more minutes. But the biggest rug pull is that the Fed had convinced markets that we were supposed to get 6 to 7 rate cuts in 2024. Well, now what we've seen is that the expectations have started to reduce, and we went from the expectation of 6 or 7 down to 5, down to 3. So right now, the consensus is that we're going to have a rate cut in June, and then we might have a rate cut in 2 other meetings to end the year, and probably no rate cuts in December. So based on Powell's testimony, based on the data that's been coming out with inflation starting to resurge, mostly because, guys, everyone's out spending. It's spring break season again. People have been cooped up after the holidays. Then you have January, February, folks are starting kind of back at work. Weather's not that good. There's nowhere to travel to. As soon as March and April hit, that's where spending starts to really pick back up and it makes inflation rebound. So what we're seeing now is based on all the economic data, the Fed has started to indicate they might not cut rates at all this year. It might not be necessary. I personally disagree. If they don't cut rates, then I think I think the economy is going to have a significant downturn. But I'm so conflicted about this one, yo. Like, here's the two dilemmas. Just so you guys let me know what you think. Just common sense. Let me know which one makes the most sense. On this camp, people are saying the economy. Okay, well, they're saying that Fed cuts rates, economy rebounds, inflation goes back up, recession, and then Fed has to raise again. This is camp number one. It's the bearish camp, which is like if the Fed cuts rates, that's supposed to add gasoline to the economy, just make the whole thing work 10 times bigger, 10 times better. There's so much more liquidity in the system for companies to borrow and invest in R&D and hiring and employment and expansion, and for consumers to go out and spend for whether it's mortgages, used cars, or any other personal loans. That's where cutting the rates really incentivizes more borrowing. But that leads to inflation coming back up, because if everyone has money, why would I lower my prices at the store? If I'm a barber, why would I lower my prices if everybody's now richer than when I first raised them? And so that causes inflation to go back up. Then people stop spending because the prices are too high, which causes the recession. And then the Fed has to raise rates again to stop inflation. Okay, so this could be a pretty nasty cycle if we go down here. The other one is that there's no rate cuts. Inflation slowly comes down. Markets, bearish correction. And then what happens here, and this is the one that folks can't really figure out, because the best case scenario for Jay Powell is no recession, which is basically what he's been trying to do. Okay, they haven't cut rates yet. They've been trying to get inflation to slowly come down. The markets were supposed to correct bearish to kind of let go of all that extra fluff, all the extra exuberance, which means like the over excitement in the market. It was supposed to just let go of that pressure. And then we were supposed to have what was considered the soft landing or the Goldilocks scenario, which is inflation comes down. We don't have to crash the economy to do so. The other situation is if there's no rate cuts, inflation is slowly coming down, but not at the rate that we would like. We go into a recession. Because prices are still high, but there's not enough economic growth to stimulate the economy to get us out of a recession. So if the Fed cuts rates, that's going to be good for the short term, but it's going to make the inflation problem way worse, which is why the Fed wants to avoid this. So if I can do an analogy here, I always use the patient going on treatment. Okay, so no treatment. All right, okay. The patient is hooked up to this machine. Let's call this. Okay, this is high interest rates and quantitative tightening. This is what the Fed is trying to do to cure the economic patient. Okay, so you guys can think about the patient here is the economy. So the Fed has been taking money out of the economy. They've been trying to slow down the rate of this inflation, which is, let's consider inflation like a virus, and the virus has just been spreading. And so this person's on chemo or this person's on antibiotics or whatever the treatment is required, and they're trying to get healthy. Now, if the Fed stops treatment, there's a chance that, number one, the body's going to come back and get healthier because you're not blasting it with radiation. But then there's a chance the virus comes back. And you don't really want to do that too early. So the Fed is like a doctor right here, trying to figure out, when do we stop the treatment? When is too early, or how late is too late? If they stop the treatment early, the patient might feel better short term, but the virus might have a chance to come back, or the cancer might have a chance to come back. If the Fed does the chemo too long, then that could hurt the patient just by the medicine alone being too toxic and hurting the patient. So whether the Fed cuts rates early or leaves them going too long, there's massive risks to the patient. So they're trying to time it. They want to stop, like they want to start cutting rates at a specific time so it can cruise off. They want to see the effects on the patient. And then if the effects are getting better and better and better, then they will continue to taper down the medicine. Timing this thing is so sensitive and so unbelievably difficult. That's why the article that we wrote last year was called The Fed's Dilemma. It wasn't called the Fed's, choices. It was the Fed's dilemma. They're stuck between a rock and a hard place. All right. Let me just talk about Nasdaq real quick in case folks are looking for this trade. You said your trading view drawing skills are pearled. Are you talking about me? Oh, you're talking about the explanations, brother David. You've edited about 100,000 million videos of me using the trading view annotations to explain concepts. You know how much practice I've had, my boy. This is a league. There's levels to this shit. All right, so yesterday on the live stream, we covered 2 entries. And I also covered all of these levels as take profit zones. All right, so what ended up happening was The market hit stop loss on the first entry. This one really hurt my feelings. It's all good. I ended up re-entering the trade. The second trade flipped up for 1.7 R, hit TP1. Beautiful. Came back for the second test. I got back in again. So I had two trades. The market hit the second TP, 206, and then crashed all the way down. All right, so there was two zones that I had at the bottom. And for the chart, I'm going to explain this for the masterclass, folks. If you've taken the Nasdaq masterclass, this is going to make a lot of sense. So I had my fib drawn from two zones. First from low to high, and I was waiting for this zone to get retested. So it was basically going to be a double bottom situation. This is what I'm currently waiting for right now. And that double bottom would be around 17,950. The other idea, which is where the market rejected today, some of you caught this trade, is from this low to the high. Okay, so we go down to the smaller time frames to find the body of the candle, find the body of the low. Boom. Beautiful. Head up to the higher time frames. All right, we have our low. We have our high. That's why on the higher time frames, it looks like I just kind of cut this wick straight through. But it was the smaller time frames that helped guide it. And if you look left, support, 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 support. And then we have kind of this zone that's sitting right below, which I would consider our discount. So the discount is sitting right below. Support is sitting right above. That's the zone I'm waiting for the retest on. So quick fib, bottom to top. And then what do you guys notice? Entry, TP1, TP2, TP3. So now I'm looking for the double bottom so I can re-enter, or maybe a little bit lower to clear this liquidity and re-enter. All the best opportunities are going to be between 950 and 990. Understood? Put a 1 in the chat if this is straightforward, this is clear. Any questions, comments, concerns about the Nasdaq trade? All right, we're going to analyze the producer price index report, see what the biggest winners, biggest losers were. And we'll also talk about some other fundamental things. Okay, seems like the Chart Addicts members got it. He said clear as water. Depends on the water. Let's say clear as Caribbean water. Clear as Bahama water. Yeah, clearer than Bimini water. Love to see it. How we looking? Questions, comments, concerns? Hello, I'm new. Welcome, welcome, welcome to the stream. If this is your first time on the stream, welcome. If this is not your first time, welcome back. If this is not your first time, you know exactly what to expect, y'all. Y'all know exactly what to expect from me at this point. I'm going to come and bring the value. I'm going to bring some serious knowledge. Am I the guy that's going to sit here and parse apart every analytic and then really go through these mundane details until all of you are just begging for this stream to end? No, that's not me. All right. So anybody that's like, Roy should talk more about this and Roy should have more of an understanding of this. Let me remind you all. Let me remind you something. My job is to simplify complicated topics for the average viewer to be able to actually make sense of it, to actually be an informed participant. My job is not to sit here and show you how smart I am by how much I can piece together this info. Like, oh, look, there's 45% decrease in this exponential rate of this. No, 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 no. Don't get me wrong, that stuff is important. But if you can't put it into a sentence like, if the Fed prints money, the markets are going to get excited and stocks will go up. If you can't summarize your understanding of markets into a simplified, actionable step, you just don't understand the concept. So what I do is I try to learn mechanical relationships, which is when I press this button over here, what's supposed to move over here? And these corollary relationships means if the Fed starts reducing the money supply, right, then typically stock markets go down, the dollar goes up, right? So there's the dollar, stocks go down. Prices go up. So reducing the money supply might seem like it's going to bring inflation down because there's less money sloshing around the system, which should bring down demand. It just makes the scarcity of the dollar higher, which makes everything else cost more in US dollars. So there's a clear mechanical relationship between a certain action and then all of these follow-up reactions. Understanding the mechanics of markets, I think, is the most important piece of really just looking at these how do I call it, these phases in the market? Because I look at markets in terms of 3, sometimes 5-month phases, where it just follows a trend for 3 months. It's kind of following a game plan. If you can understand the direction and the game plan that the market is following, you can trade that same direction for months, as opposed to having to rethink your directional bias every single day. All right, so a lot of stuff. You can understand the mechanics of markets. If you're interested in that, we also have a incredible course on our website for trading news. But you can't trade news if you don't understand how fundamentals work. And so I kind of turned it into an economics course first for macro and micro, and then allowed folks to have that foundation and then use that to trade news specifically. So the way that the course is outlined, this is not a plug for the course. I don't really care if people get this or not. Fundamentals is not for everybody to understand. I would say more people would have success with technical analysis than they will with understanding fundamentals. But it's still your job to not miss the big stuff. And this is what I tried to cover in the course, which is the big stuff. How central banks work. Because if you understand what are the incentives of the central banks, guys, who moves these currencies? All right. We always talk about Citibank and Morgan Stanley and all these big commercial banks, but really it's the central banks that have the biggest impact on price. I'm not talking about Nasdaq specifically, mostly for FX. And so if you understand how FX moves, and what are the incentives that move the market, what are the sort of main data points or the main news events or the main things that will affect a currency's value versus another currency, then you're going to be at an advantage. You're going to look ahead. You're going to be able to find opportunities and edges everywhere. How have I been shorting the yen for so long and just buying UJ? How? How? How have I been shorting Euro USD since 2020? Because I've been bearish on the euro, I've been bearish on the yen as currencies. I understand the central bank policy of overprinting your money. Okay, so just printing way too much of the money and then making it cheap or free, or sometimes even paying people to take it, is going to make your currency worthless. Is going to make your currency absolutely worthless. And so if it's between the dollar, the world's dominant reserve status currency that's protected by the US military industrial complex and the petrodollar system, versus this Japanese monopoly money, it's very easy. Buy UJ for years until the Bank of Japan finally pivots, which they can't because they're in an unbelievably tough situation. So when you understand these correlations and the fundamentals, you can find a play like keep buying UJ, like keep shorting Euro USD. By the way, Euro USD did not make it to our sell entry. I'm still hopeful, though. Still hopeful. All right, we've been shorting the Euro USD for so long. This is some of the most money I made when I quit my job at Merrill was in this trend right here. Every single time it would create support, drop, retest 50%, and then crash. Okay? Establish support, push up, 50% retest, and then crash. Form support, push up 50%, and crash. Form support, push up 50%, and crash. And I just did this all freaking year. So the technicals was so easy because the fundamentals was already in play. I already knew the directional bias of where I wanted the market to go. All right, so the fundamentals course will include mastering economics. And then what I was just talking about is market mechanics. Market mechanics is so a narrative is a story that the market participants are telling about what's happening. Bro, the reason that Tesla stock is not doing well is because Elon and this and that. So there's a story around it. Mechanics are, like I said, if you press one button on this side of the economy or on this side of markets, there's another thing that moves on the other side. These are the mechanical reactions that happen in markets. And then a dynamic is a set of a bunch of these mechanics playing together. So I'll give you guys like the inflation dynamic right now is a lot of like the spending, lending, consumer habits that are typically associated with interest rates are all playing into the human psychology of whether people want to go and spend right now versus not. That's a dynamic that we can measure. A ton of small mechanical and provable quantitative things happening all over the economy that we can track into an overall picture of what's going on. So we go through every single one of those, and then of course building a thesis, like how to figure out which way the market is going, and then trading news events, which are basically kind of like the catalyst or the fuel to the fire for these events. Cool. Any questions, comments, concerns about that? Very straightforward stuff. Very straightforward stuff. This is a slight plug. This one's a plug. The other one, if you don't want it, like fundamentals is not for everyone. The NAS100 masterclass strategy, this is for everyone. Whether you have a system or not, this can help you improve your current system. But if you don't have a clearly defined edge that you can trust, you know you can take it to any platform, whether it's a broker or a prop firm, futures or CFDs, and be successful because you understand market mechanics. If you don't already have that, the sooner you get one, the better. The first step of successful trading is to have a successful edge, to have a system that you know works. Then you need the discipline to apply it. You need risk management to make sure that no matter how you feel that day, you're never going to blow the account. And then you need to make sure that you have impulse control so that you don't fuck up the account based on one day and how you feel and what you want out of life. Okay? You make logical decisions. But the first step is having a positive expectancy system, and most people do not have a good enough strategy. What's the benefit of a good strategy? More margin for error. What's the benefit of a good strategy? You don't have to guess of how long you should hold the trade and what if it reverses and none of that. So the benefits of having a clearly defined edge will help you build momentum by just starting with something that works, figuring out the kinks, not in the system, but in your execution along the way, and then fixing those step by step to become the most successful trader you can be. Put a 1 in the chat if this at least makes sense. Not saying that everybody who comments is going to sign up for the masterclass, but put a 1 if this concept of having a positive expectancy system makes sense to everybody. If you're trading concepts, which means, oh, I trade trend lines. Trend lines is not a freaking strategy. Trend lines is a concept. It's one of thousands of concepts. A strategy is taking concepts, maybe 4 or 5, piecing them together into something that you know will work, not just sometimes, but most of the times when presented with these same elements. When I see these 5 elements, this is what I should expect to happen. Positive expectancy. Most of you do not have that. You have a support resistance system with maybe a Fibonacci execution, but you don't have a clearly defined system that's step by step. The step by step, every step in the Nasdaq system, so finding the directional bias, finding those key levels, identifying the discounts premiums above and below those levels, identifying the location of price in the structure, and then using the heartbeat model to find entries. Each one of these steps is like a filter for bullshit. Each step, like, okay, directional bias. That eliminates 90% of the mistakes that I was going to make trading against the trend. Okay, so boom, that system already kind of, the first step already kind of does a filtering. But is that enough? No. Now I have to find zones. Does the market perfectly respect support resistance? No. So let me find these extra, these discount and premium sort of accessory zones. Is the market ever just going to get to my level and just on a dime reverse with nothing, no retest, nothing? No. So now I could use my entry strategy to make sure I'm not entering prematurely or I'm not getting a late entry. And so a system is a set of concepts put together perfectly into something that can be back tested that has a positive expectancy over time. He says, Tory trades punch in the air when you mentioned Trella. Oh shit. No, I love Tory, man. But if it works, it works. Here's the number one rule of trading is that if it works for you, it works for you. I don't care how good Roy is. Just because I said something doesn't fucking make it true. If you've been making money for 10 years with trend lines and I come out and I say trend lines don't work, what the fuck does that matter? You've been making money for 10 years. My opinion is not going to change it. You guys understand? And that's why I always tell folks who listen to me, be a student and not a follower. Like I am not an influencer. A lot of people are like, Roy, you're an influencer in the space. Suck my dick if you think I'm an influencer. I'm a man, I'm a leader, I am an inspiration, I'm a visionary. I'm not a fucking influencer. I might have influence, and you have to stop and ask yourself, why do I have influence? Who are the most influential people in society? Those who are the most sure about what they stand for. That's why I have influence, because I'm dead sure about what I stand for, not afraid to speak on it. People listen to that and say, I agree with those things. I respect the fact that he's willing to stand on those things that we have in common. And that's why folks are willing to kind of hear me out about other topics. I am not an influencer by any stretch of the imagination. So the reason I'm saying that is I tell folks to be students and not followers. The difference is a follower, like imagine if you were too lazy to keep up with the news. And all of us have shit going on. So I'm not saying that I'm not in this camp too. But what we do is we find 2 or 3 credible sources that we feel like are doing their homework or doing their job. And then we just follow whatever they say. Okay. Oh, here's the stance that Joe Rogan took on this thing. It's a pretty neutral stance. I'll take that same stance because I don't want to sit here and look at the details myself and figure it out. That's a follower. A student says, okay, they said that there's a border crisis. And they said that there's this many illegal immigrants crossing through the border. And they're saying it's an invasion. Instead of taking that at face value, let me go through the data itself. So let me go through the past 10 years of illegal immigrant crossings. Now, let me use my own judgment, okay? Because I know how many people break the law every day, and I know how many people get arrested every day. And a lot more people break the law than get arrested. So clearly, there's more people crossing than what is being documented by the border patrols. So I'm going to have to add my own discretion to this data to understand the flaws in the data. All right, now I'm a student. I'm looking back. I'm looking at this shit like, is that even true? Who deported more people? Was it Obama or Trump? Well, it was Obama. I'm like, well, they were kind of making it seem like Trump hated immigrants and Trump was separating people at the borders, but twice as many people got deported. I'm trying to make sense of it. Student, not a follower. So that's your obligation. Those of you that will be successful at trading will be students. Those of you that will be on this hamster wheel for a long time, you will be followers. You have to take your life into your own hands by being accountable and responsible for the information you're being fed and by using that to make the best decisions. All right, so if it works, it works. Says she's not happy, Roy. I think she's having a great time. I think she's in a great place in her life. And I don't think that my comment about trend lines not being a strategy, just being a concept, is going to offend anybody. If it does, we got bigger problems, okay? All right, dollar back on the move. Super secret indicator, magnet indicator. Can't find it anywhere else but these streams. Does not miss the most accurate indicator in the world. Damn, 105.6. Market is back on the move. Back for dollar bulls. Back for dollar bulls. I'm looking to see if price gets stuck at the 103.7 level and then comes back for the double bottom first. If we break through this 103.7, then there's a very good shot that we continue to that next target. So we have a moment of truth here coming up tomorrow that I'll be paying attention to. Let's take a look at US 30. I don't know why I feel like the market is giving us exactly what we want. Oh, because it is. So the whole concept, when I explained this yesterday, was the market was coming up on this previous high. I drew my fib down. Well, actually, I drew my fib from bottom to top, and then I reversed it. A little reverse trick for you guys. Little super secret trick for y'all. I was expecting price to come back inside the range, hit 38,700, and then continue to the upside. We might actually just respect this level before we continue. All right, so it was either going to be the 61 or the 38, and I think it's choosing the 61 based on this rejection. Rejection looks really good. From break to high, it's 88.6. If you guys want me to prove it, I will. Let's do body to wick. Okay, 88.6. TP1 already got hit, so this actually could be the second leg down, which would make my life a lot easier, get much better entry. If it continues to the upside, then we'll just use the next target, which is 38.98 or 39.98. And then the previous high would be the next target. Okay, I'm not going to buy it just yet. I would much rather see a liquidity grab first, Same with Nasdaq. I'd much rather see the push down first because I don't want a late entry. I'd rather miss the trade than chase the trade. All right, ladies, gents, this was going to be a very short stream today. I know that we went through tons of value. I know that there's not a, like, you really can't remember everything I just said. So take some time to go back and review these streams. I know my voice, guys, I don't like to listen to myself back. But honest to God, there's a lot of value in here that could change your life. And you could save yourself $60,000 in a degree by listening to and picking up some of these pieces. So if there's any advice that you guys have about how to make the audio quality better or how to make the listening experience or the viewing experience more, I don't say accessible, but just make it a little bit more palatable, because I know these are tough concepts to go through, please let me know. I'm not here trying to be like the professor on the stage and everybody kind of like getting bored because of the concepts. So if there's any advice you guys have, throw it in the chat right now. If not, take it easy. Great to see all of you this morning. Drop a like on your way out. Okay. Also, masterclass now live. Click the link in the description. And please go check out the recent interview I have with Dr. Richard Olson. I cannot put into words. I even shocked myself with how good of a discussion that is. And I went through and time-stamped the interview. Chart Addicts, Dr. Olson. Beautiful. I went through and time-stamped it so you guys can have easy access for viewership. Oh, it's in the comments right here. So at first, we talked about the current prop firm and brokerage situation. Funny enough, Dr. Olson had heard about the entire debacle, and he gave us his insights on what he thinks is going on. We talked about the future of financial markets and the need for innovation. We talked about his no-fee crypto exchange, the Luke platform, which we linked in the description. We talked about the outlook on crypto and what he thinks is going to happen about Bitcoin and Ethereum, which is huge because he owns a crypto exchange, for God's sakes. We talk about regulation in Forex and crypto and what the regulators are getting wrong and what business owners should do. And then this is my favorite. I had Dr. Olson give some advice to a bunch of my friends building in this space and telling them what they should really be doing in terms of, like, the regulators are bullying us right now. How should you stand in the face of regulators when you know that you're right? When you know the Constitution is on your side? That's what Coinbase did. Coinbase did the craziest thing, which is they sued the SEC. People, you don't sue the SEC. You avoid them. You get sued by the SEC and then you regret your life. You don't sue the SEC unless you know that you're on the right side. And so Dr. Olson, obviously, he's an FX giant. He built the biggest brokerage in the world today, which is Oanda, multi-billion-dollar company. And he's given us that advice. So after this stream, please make sure to go and check that out. And of course, we're dropping student spotlight podcasts all week with successful students who have graduated from the masterclass. Those of you who are sitting here doubting whether the class is going to help you or not, oh, I've already spent so much money on courses and they don't work. I don't think this one's going to work. Watch the fucking videos. Stop cheating yourself out of your success. Stop kicking the can down the road. Your life is not going to get better by waiting for some magic moment. Make a fucking choice. And if you're like, well, I just don't want to get wronged again. I don't want to put money on a course and it doesn't work again. Watch the fucking testimonial videos. Some of you guys are just not taking your future serious, and it's the reason for your lack of success. And so today's the day you have a choice. Pick up the fucking slack or just give up on the dreams. There's no reason to be ambitious and lazy at the same time. You'll be miserable. All right, so either put in the work and do the right things, like get a positive expectancy system, get the right plan together so you can have success in 2024, or just accept the fact you're going to be on the hamster wheel and just be like, okay, well, maybe I'm not going to make the 100,000 this year, but that's cool, no problem. Accept it. Those are your choices. It's change time, people. All right, happy, safe trading. Take it easy. Peace.